All right, and we are live in our second episode of Crypto Muse Cage.
Wait, seriously?
Guest starring
Let's go.
Kyle Williford.
What's up?
What's your Instagram handle, Kyle?
Kyle Williford 1.
Follow him.
Let's go.
So, as promised in my very first video, which I may or may not post, depending on how much information this overlaps, I said that I would be bringing someone and showing you guys how to get started in crypto live. So Kyle's a good friend of mine, and he's been asking for a little while how to get into crypto. He started asking me in December, and thank God I was too fucking lazy to show him then, because had he invested then, he would be, maybe we wouldn't be friends. But given the crash, right? Well, I don't know about that. If you did, I'd probably have to start following your trades too. But given that we are past the storm, knock on wood, hopefully that's true. I thought it'd be a good opportunity to get Kyle up, get him up and running with all these different accounts, and show him exactly how to buy Bitcoin, Ethereum, and any other coin that he wanted to purchase. And so, this is going to be a very free-flowing interview or tutorial, right? Kyle has a lot of questions about Bitcoin and Ethereum. I think he's fairly new into it. And as I said to him, only invest what you're willing to lose. So we're going to walk through it today and basically just show you how to go step by step and purchase Bitcoin, Ethereum. And the first place that we're going to start, we're going to do Coinbase. We might even do Gemini. So Kyle, do you have any questions before you begin? And we're gonna do it actually on a separate screen, just so his information is protected.
Right.
If you need any help with inputting information in, you probably should not be invested in cryptocurrency. So we're gonna leave that part up to you.
Is this for like beginners like me, or is this for like?
I think this is mostly going to be for beginners. I think there's a lot of people who know how to sign up for Coinbase or sign up for Gemini, but they don't know how to do much else.
Right.
So let's get you signed up really. All right, we are back, and Kyle has just created his Coinbase account. As you can see right now, he has exactly $0 in every single account, but for reference, Coinbase only supports 4 coins at the moment. Bitcoin, right? Bitcoin Cash, which is a fork of Bitcoin, Ethereum, and Litecoin.
Ethereum. I hear you say that a lot, actually.
Yeah, and Ethereum is probably, for the risk-reward ratio, Ethereum is my top pick. This isn't financial advice, so invest at your own risk, but personally speaking, I like Ethereum a lot, and the reason for that is there's a couple of different coins, right? So if we go on coinmarketcap.com, you can see all the coins that are currently out there, and there's thousands of them, right? So realistically speaking, to do research on this, you rather got to take a lot of coffee and Adderall, or you're not going to get it done. So you have to rely on other methods to discover these different types of coins, and to use a limited amount of time that you have in order to do the best research as possible, right? And so right now, there's 2 main types of tokens, right? Utility tokens and blockchains, right? So Ethereum is a blockchain, right? Whereas something like actually a lot of these, and you'll notice a common theme that a lot of these coins are, especially within the top 100, they are blockchain tokens. And a blockchain is basically a coin that another cryptocurrency company or community can build on top of, right? So with Ethereum, the reason it's so valuable is that you can have coins like Omisco be built on top, right? And the reason I like these so much is that it means that there is utility and there is demand that is generated for it today, right? Yeah. Because in order to invest in these ICOs, so an ICO is called an initial coin offering, right? Which is very similar to the traditional stock of like an IPO, right? Which is initial price offering. That's when a stock hits the public marketplace for the first time. Does that make sense?
No.
Does that make sense? Okay.
Basically everything.
We're going to take a step. We're going to take a step back. So when there are private companies, so in the traditional sense, there are private companies right?
Yeah,
and when they want to go public, which is basically, when you first start a company, everyone has shares of ownership, right?
Yeah.
But the only way to sell off those shares that you have is to do something called an IPO and release yourself to the public market, which is like NASDAQ, which is like the Dow Jones, which is what you see on CNN.com, right? And CNN, it's like Apple. They had an IPO when they wanted to sell off shares of their company.
Yeah.
Right, and it's similar in the sense, but don't get it confused, because an ICO, unless it specifically states, typically you are not getting equity of that cryptocurrency. So there is a distinct difference, and it is somewhat controversial. I may make a video on it, kind of explaining the pros and cons and what's kind of going on within the startup community today. But essentially, right, an ICO, and you can find out all the ICOs that are happening, but it's essentially companies that are offering their coins to the public marketplace. And there's a lot of scrutiny right now, a lot of regulation, and that's part of the reason why this market is so uncertain right now. It's because of the upcoming regulation of what is going to happen with all these ICOs. Are they going to be classified as securities? What's going to be the consequences that the government puts when these regulations come in place? But these are all the ICOs you can see: upcoming ICOs, ended ICOs, active ICOs. But the thing about this is that, and you can see how much money they're raising: 9 million, 17 million, 50 million. The thing is, if you want to invest in any of these cryptocurrencies, you're going to have to purchase Ethereum, right? So it's an ERC20 token, and what that means is that Ethereum is the blockchain. It's like the underlying asset that this coin is built upon. So every time there's a transaction from this, it'll actually take a micro bit of Ethereum. So that's where the demand comes. And then on top of that, the demand, in order to purchase into this ICO, in order to get a share of these tokens, I have to buy Ethereum first and then give it to these guys so that I can get my ELEC tokens.
Right.
Does that kind of make sense?
Yeah, a little bit. And how much would like one token?
So that's what I really like about ICOdrops.com. It tells you, it gives you pretty good amount of data about what you're buying, right? So one ELEC token is 8 cents USD, and you always want to make sure that they peg it, that they peg the ICOs that do not peg to a fixed amount and they just peg it to 1 ETH equals this much. You want to watch out for that, because in a bullish market, right, if you gave them 1 ETH when ETH was $1,000 and then it went up to 2,000, and they said that 1 ETH equals 1,000 tokens, if ETH went up to 2,000, then your purchase, your ICO price just doubled, because the price of Ethereum doubled and they didn't give you any new coins. So you want to make sure that the ICO token price is usually pegged to a fixed dollar amount. Does that make sense?
Yeah.
Another thing to watch out for is as a U.S. customer, or U.S. citizen, a lot of the times we can't participate in them because of our strict regulations. There are workarounds for that, like you can ask relatives or ask friends of friends, which is what a lot of people I know have been doing, or you can join pools, syndicates. But there are ways. Again, that's not investment advice, and you probably shouldn't do that. But back to the topic. So there are tons of these coins that you're willing to buy, and of course, I think all the coins that are on this top 100 list, or not all of them, but the majority of them are really strong projects. As you get onto the later pages and you go to the next 100, the next 200, these coins become a little more obscure, a little more questionable, but they also have a much greater chance of a reward, right?
So that's to buy that coin. One of those coins is $2.38.
Exactly. So to kind of quickly walk you through it, market cap. So market cap is basically defined as the number of coins multiplied by the current price, right?
All right.
But you got to watch out for that too. And that's why they have volume there, because volume means a lot of things. It's very important in technical analysis when people are reading the charts, but volume basically means how much of this coin moved today in a dollar amount, right? And the reason that's important is because let's see if we can find a good example. Okay, this is a good example right here. So this SuperNet is currently valued at $139 million, right?
Right.
And its price is $170
Per coin.
Right. But the thing is, the volume was only $18,000, right?
Yeah.
And so because you have to remember the equation of market cap, it's price multiplied by supply equals market cap. If this was my coin, all I'd have to do if I wanted it to get noticed was just put $18,000 into it, and I can make the price rise from $20 to $170, right? So that's why volume is an important metric when you're analyzing charts, because you want to see a healthy amount of volume, which means a lot of buyers that are purchasing this coin, and that kind of legitimizes the price that it's at. If you see a thin volume amount, then it's suspect to, well, is this price really real, or is it a fluke, right? Because theoretically speaking, if I purchased, and this won't happen because with the exchanges, well, CoinMarketCap also averages the amount because there are many. Well, this one probably only has one, right? Because it's such a small coin. But you can see that with a coin like Bitcoin, it's on tons of markets, and the price that they pull right here is a weighted average of all of these prices, right? But theoretically speaking, right, if it wasn't like that, and CoinMarketCap just pulled the highest current price, I can go onto an exchange, and I could purchase one Bitcoin at 20. Not even one Bitcoin. I could purchase 0.001 Bitcoin at a price equivalent to $20,000, and I can make the price of Bitcoin rise back up. So you want to always pay attention to volume when looking at these coins and making sure that price is legitimate. So you have a Coinbase account. Now let's get started into buying those. So with Coinbase and Gemini, I can purchase on Gemini I can purchase 2 coins, Ethereum and Bitcoin, and on Coinbase I can purchase 4 coins. All right, and we are back. I am about to graciously give some ETH to Kyle as a little token of my appreciation for being on the channel today. And then he's going to make it back and return it to me, obviously. So I have just sent him, I think, 0.2 ETH, right? And with that, it'll take a moment. You'll see that whenever you send an ETH or send anything, you're going to need confirmations, and that's basically part of the decentralized aspect. Decentralized because everyone says that, even though a coin says that they're decentralized, they may truly not be. So you always have to kind of do your own research and decide for yourself whether or not that coin is centralized. So basically what I did was I took his, in order to send him Ethereum, I have to ask him for his address, which is right here. Kyle has just created his Ethereum account, or not Ethereum, Binance account. And my favorite exchange is Binance. It is a foreign exchange, but in terms of the volume, the liquidity, and the amount of coins it has, right? And so that's kind of how you dictate what kind of exchange that you'd like to be on. Because the truth of the matter is that a lot of these exchanges today, they are not regulated in the safest way. It's very possible that you could lose everything on this exchange, and that's why in my next episode I'll be talking about cold wallets and hard wallets. So things like a Trezor or a Nano that basically make it so that you have physical control over your digital assets. So I have just sent Kyle about $300 worth, 0.3 Ethereum. And it'll take a moment for it to arrive. Just putting in my 2FA, which is two-factor authentication code. And basically what that is another level of security that makes it so that these exchanges know that it's you. So it's a Google authentication token. So whenever I do a trade or I log in, basically, in addition to the password, instead of something like an email verification, everyone has phones these days, so they ask for a code that's randomly generated, and I can show you guys how to set that up as well. But it always asks for that, and I highly recommend that you guys turn it on in case someone else gains access to your computer. As long as they don't have your phone, your tokens are safe. Right, so I've sent that over to him, and we can kind of just explore Binance for a little bit, right? So and we can kind of just talk about the ins and outs of what trading is.
So many numbers and so many graphs and
yeah, it gets confusing, doesn't it?
Squiggly lines.
And I think it's overwhelming, and even the microphone was turned off, and Kyle just said that this is such an overwhelming amount of information, and it truly is. Right, and that's why I say that it's not advisable to trade daily these tokens. For me, every single time I've traded, I have rather broke even